Niftynayak.com, and before I get started, I want to apologize to all my followers for not coming out with video for a long time. I was held up with many other things and I was involved in a lot of things, because of which I was not able to blog and do videos regularly. Now I am free and you can expect consistent videos from my side. So in this video I am going to talk about a strategy which one can implement for the coming budget. And in fact this is the strategy what I will be coming out with. So before I get started with the strategy, there are some things which we have to keep an eye on. Okay? And again, whenever there is a major event like budget, election or whatever, don't try to guess the direction of the market. Okay? Guessing the direction of the market is very difficult and not many have been successful. Yes, probably you might be successful once or twice, but it is not something which can be done consistently over time. So before I get started with the strategy, let me tell you some of the things which we have to keep an eye on. The first one is the Russia-Ukraine. So now you know that there is a conflict going on between Russia and Ukraine, and Russia is planning to invade Ukraine because Ukraine is planning to join NATO, which Russia is scared of. Okay? So Russia has deployed its troops and US along with NATO had deployed their troops on the Ukraine side. And recently Ukrainian leaders came out and told that because of international pressure, Russia is not going to escalate the situation. But you never know. For now it looks like the situation is calm. You can see that in the oil prices. Okay? Oil prices had shot up above $90 per barrel and now it is slightly cooling off. Because Russia is one of the major oil producer in the world. Okay? And if Russia is part of any war, you can expect tight in the supply. Okay? So now you can consider this as a non-event because the situation may not be escalated. But again, you never know what is going to happen. The next one is the US Fed. So last week we had the US Fed policy and everyone was eagerly waiting for that event. So everyone wanted to know what is Fed going to do with the interest rates. Okay. So now that event is also over and most of the things are factored in the US market and as well as in the Indian market. So even you can consider this also as a non-event. The next one is the FII's DII. You can see FIIs and are selling relentlessly in the Indian market. Okay. In fact, they have sold for more than 1.2 lakh crores. Even during the peak pandemic time, that was in the March 2020, they did not sell this much. So now why are they selling this much is something which we have to worry about, because do they know something which we don't know? You never know. And at the same time, DIAs are not supporting that much. Yes, DIAs are buying, but they are not able to match the selling what the FIIs are doing. So the rally or the support what is given to the market is by retailers. Okay, is it good to hand over market in the hand of retailers at this point of time? I don't know. That only time will answer. Because this is the first time in the history where retail participation has been so huge. Okay. After the pandemic, retail participation in stock market has gone up exponentially. Okay. So has the FIIs become irrelevant in the market? Only time will answer that. Okay. So now you can see that markets are very volatile when there is an event. Okay. If you see from last 1.5 months or 2 months, market is all over the places. Take this month, that is January 2022. On day 1, it was at 17,200 Nifty. Then in next 10 days, it shot up to 18,400, which was around 1,200 points rally. Okay. And in the next 10 days, it fell from 18,400 to again 17,000. So in this month, there has been a swing of more than 2,500 points. Okay. Which is really too much for Nifty to move on a monthly basis. And the monthly candle, which was in deep green for the first 10 days, is now in the red. We have one more day for this monthly, for this month, that is the Monday. I don't think the monthly candle is going to be in the green. Okay. So now in this budget, there is nothing much people are expecting from the government for the corporates. Okay. Because even government's hands are tight because they have spent a lot in fighting the COVID. So don't expect huge incentives for the corporates. And when there is no huge incentive for the corporates, there is nothing much up rally which you can expect from the market. But what I personally feel is that the last fall in the Nifty in the last 10 days, okay, has been very brutal. I feel that the markets are in oversold region. And now after the budget, I am expecting a rally on the upside in the budget, after the budget. Okay. So now I will be telling you the strategy which I will be implementing for the coming budget. So let us see what the strategy is. I hope you guys can see the screen. So I have opened the Dow Jones chart, okay, the US markets. So here you can see that we have a strong support in these regions. Here, 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 here and here. So whenever Dow Jones has come to this region, there has been a support and it has gone higher. Okay. You can see the same thing has happened in the last 2-3 days. The US markets fell drastically in last 1 to 1.5 months, especially the Nasdaq. The techs have been sold drastically in the US market, because of which the Nasdaq has been falling drastically. Okay, but now it seems like there is some bottom which has been formed, and from now the US markets may go higher. You believe it or not, Indian markets simply replicate the US markets. If US markets fall, even we fall. If US markets goes up, even we rally. Okay. So from last 2-3 days, we have seen that US markets are going higher. And now, since we are going to the budget with less expectation, even a slight incentive by the government or by the finance minister will be helpful for the market, and the markets may go higher. That is what is my school of thought. Okay. Yes, I might be wrong. So I will be designing a strategy accordingly, and I will be telling you how you have to do adjustment and when you have to do adjustments. Okay. So now let us see what those adjustment and trades which I will be doing. So this is the obstruct. So we see that now Nifty is at 17,100. So the trade what I will be taking on Monday is I will be buying 2 lots of 17,200 and I will be selling 1 lot of 17,000 call. Okay. So when you do that, this is the payoff chart which you will be getting. Okay. So now here you can see that the maximum loss in this strategy is around 20,000 and the profit is unlimited provided the Nifty goes higher. Okay. The more the Nifty goes higher, the more profit you will be making. Okay. But I will not be considering this as the maximum loss. I will be interested in this point, where the market is going to become, where the payoff chart is going to become flat. So here you can see that the loss is around 12,000. And now you can see that the capital for deploying this trade is around 17,000. Okay. But again, don't go by this capital. I will be telling you the actual capital which is required, because if things go wrong, you will require capital for doing adjustments. Okay. So now this is the trade which you will be taking. So if you are taking this trade, make sure you have a capital of at least 4 lakh in your account. Okay, the capital required for deploying the strategy is around 20,000, but you will need around 3 to 4 lakhs for doing adjustment trades. Okay, so for every 4 lakh of your capital, you deploy one set of this strategy. So if you have 10 lakh, do 2 set. If you have 20 lakh, do 5 set. So that's how you will have to take this trade. So now let's see what will happen on Tuesday. So in Tuesday, if the markets like the budget and if markets shoot higher, wonderful, you will be in profit. So on that day, you can decide whether you want to close the trade or you want to do adjustment and carry it till expiry. So what I prefer is, I prefer doing some adjustment. So I will be doing adjustment irrespective of whether I am in profit or loss, so that I will be coming out with more profit when I do adjustment, in case my trade is in profit. And if I am in loss, I will be doing adjustment to reduce the loss and to come out in profit. Okay. So now the adjustment strategy for this is a short strangle trade, which means you will be selling deep out of the money call and put option. So now let's say on Tuesday markets like the budget and it went up to probably 18,000. Okay, I will not be doing any adjustment for on Tuesday. So I will be doing adjustment after 10 trading sessions. In February we have 20 trading sessions and we don't have any holiday, public holiday. So after 10 trading session is when I will be taking a call to do adjustment. Okay. So for the first 10 days, irrespective of whether I am in huge profit or whether I am in huge loss, I don't care. I will just not touch this strategy. So after 10 days, if Nifty is at, let's say, 18,000, okay, it will be around 18,000, means the spot will be somewhere here. Okay. At that time, what I will do, I will sell short strangle, where I will be selling strikes whose premium is around 60 to 70. Okay. So if Nifty is at 18,000, then probably 18,500 call will be around 60. Okay. I am taking a figure here. Okay. So I'll be selling 3 calls, and this is how the payoff chart is going to turn. And I will be selling probably 17,400 put, which will be again around 60. Today it is 500, but on that day it will be around 60 because market would have rallied higher. Okay. So this is how the payoff chart is going to look like, and your spot will be somewhere here. Okay. Now the spot is here, it will be here, somewhere here. Okay. So now if market continues to trend higher, you will be making wonderful profit. And at any point of time, if your profit is around 3 to 4% of your capital, I will be exiting the trade. So now you can see that the capital what we have deployed is around 4 lakh. Okay. So for 4 lakh, if I see this profit to be around 4% of my capital, then I will not be more greedy. I will simply close all the position and book my profit. Okay. Now, if things happen like this month where it shot up 1,500 point in first 10 days, and if it shoots retraces another 1,500 points in the next 10 days, then probably your strategy, this strategy may be in trouble and you may have to book some losses. Okay. And after I do this adjustment, I will be putting a strict stop loss of 2% on my capital. So at any point of time I see a 2% loss on my capital, which is on my capital of 4 lakhs, then I will not think of doing any more adjustment. I will be simply closing the trade. Okay. And if things work out, if things go rally higher and if it closes somewhere in this region, you will be making approximately 10% provided you carry this till expiry. But as I told you, if I make 4 to 5% of my capital, and if I will be usually closing the trade. Okay. So I will not be waiting for the maximum profit whatever I get. Okay. So this is the trade. So now
the same thing applies even if market goes down. So now let me just delete the adjustment trades. So this is the trade which I have taken. Now on Tuesday, markets did not like the budget and market crashed. So from 17,100 probably it came down to 16,500. Again, as I told you, for the 10 days we will not be touching this strategy. So let's say after 10 days market is somewhere around 16,500. The same adjustment strategy continues. So what I will be doing, 16,500. So probably 17,200 call will be around 50 rupees at that point or 60 rupees at that point. So I'll be selling 3 lots, and 16,500 means probably 15,900 put will be around 60. Okay, so today it is 65, even at that time it will be around 60, 70 only, because theta decay would have happened. Okay, so now I'll be selling 15,900 for 3 lots. Yes. So your spot will be somewhere around here. 16,500 means it will be somewhere around here. Okay, so you will have another plus or minus 500 point range for you for that expiry. So if Nifty stays in this range, you will be making a profit of 5,500 approximately, which is approximately 1 to 1.5% of your capital. You can see that the capital deployed at that point will be 3 lakh. So on day 1 you were bullish, you took a bullish trade, you were wrong, markets fell, and you are doing the adjustment strategy, and if things work, you will be making 1.5% of your capital as profit, even when your strategy went wrong, even when your view went wrong, which I feel is wonderful. Okay, provided it stays in this range. Now, as I told you, the same principle applies here as well. At any point of time, if you see a loss of more than 2 to 3% of your capital, which now your capital is this one, okay, 2 to 3% of your capital, then don't hesitate, just close all your trades. The trade did not work in our favor, just close it. So this is the trade and which I will be taking for this budget. I hope you guys like the trade and the strategy. So thank you guys for viewing this.